What's going on, guys? My name is D. Anthony, full-time options as well as futures prop firm trader. In this video, we're going to be talking about how you guys can pass some of these Topstep challenges. So Topstep is going to offer a $50, $100, and $150,000 account that you can go with. Typically speaking, the 50,000 is probably one of the most popular ones to kind of get just based on how much drawdown and risk you're allowed with the amount of leverage that they're going to give you. So in this particular case, I'm going to talk about the $50,000 account. You're going to get a $2,000 drawdown limit. So meaning if you lose more than $2,000, they're going to kick you off the platform. You got to buy a reset or another combine. And you're going to get that $1,000 daily loss limit, which in my opinion, I think it's very, very good to have that, because a lot of times traders tend to get into trades. Maybe they start off with a loser or a winner, and then you kind of go on tilt, either trying to make more if you're already green or trying to trade back those losses. And then what ends up happening is you go on tilt and tend to kind of lose that account in one day. At least with them stopping you out and auto liquidating your account for that trading day at around $1,000, you're allowed to come back to the combine. You're allowed to come back to the charts tomorrow with a fresh set of eyes, a fresh set of charts, and potentially trade your way back. Now, one of the biggest things that a lot of traders tend to do is not necessarily understand the amount of risk that they actually have. A lot of people look at the $50,000 account and they see it as, bright, shiny lights. Like, hey, I've got $50,000 I can trade with. I can make $10,000, $20,000, $5,000 in a day or in a trade. And it doesn't necessarily work that way. Truly, what you're trying to work with is that drawdown limit. So that $2,000 is technically your account balance. That's technically what you have to trade with. Now you're leveraged and you have like margin, I guess you could say, right? Like that's an easier way for me to put it to newer traders. You're leveraged up to 50,000. So can you trade multiple accounts or multiple contracts? Of course. Can you make a limited amount of day trades as long as you're not going over the amount of contracts that they're allowing you for that specific account? Of course. But realistically speaking, I've spoken with a lot of traders over the years, and some of these traders are going in 5 contracts, 3 mini contracts, 10 mini contracts. They're maxing out the number of contracts that they're allowed and able to trade. And what's happening is you're picking an instrument like the NASDAQ 100 that moves extremely quickly. It's extremely volatile. And next thing you know, you're down 20, 25, 30 points. Boom, you've lost your account. You're auto liquidated on the day. So you kind of have to figure out that sweet spot of how much risk you're actually able to take on without blowing your account. See, you don't want to have such a tight stop loss, especially in the beginning stages of trying to get funded. One of the best routes that you can do is if you've already been trading for a little bit of time and you do have a strategy and you have proven to yourself that you can be profitable, but it's a limited amount of money that you're making at a time. Let's say, you can identify setups, you have a stop loss, you can make $100, $80, $150, and then, you can't really do any more than that. I would say stay there. But when you're in these combines, in these evaluation, for these prop firms, that might take a long time to pass. Now, if you're just starting out and you're just getting comfortable with the charts and using the platform and working on your risk management and working on your strategy, then I would definitely say, try to make $50 a day, try to make $80 a day, and then call it quits, come back tomorrow. Do it over and over and over and over. Even if it takes you 30 days or even 60 days to pass one of these evaluations. The whole goal is to get funded so we can get paid out. It's not to try to over leverage ourselves and pass in one trade or try to make $1 million on one particular trade. Now that's one way to do it if you're just starting out. I, however, do work with other people and myself the way that I do it. What I do is a little bit differently. I kind of treat these evaluations as a business expense. So for example, if we're talking about Topstep and we're talking about a $50,000 account, I know that it costs $50 for that evaluation. So let's say, for example, I want to go out there and buy 3 evaluations. That's $150 of total risk, total investment that I'm putting down on the table. And one thing that I'm going to try to do is risk 1 to 2% per trade on that evaluation stage. 1% on a $50,000 account is being about $500 worth of risk. So either I'm trying to target that 1-to-1, either I lose 500 or I make 500 per trade, or I bump that up to 2%. Either I make 1,000 roundabout or lose 1,000 roundabout on that one particular trade. If we have a $3,000 profit goal that we need to hit before we can pass and get funded into that express funded account, if you want to look at it that way, say for example, you're going to put up $150 worth of total risk. You're going to trade the 3 accounts separately. Let's say on one of those accounts, you're going to use a 1-to-1 risk to reward ratio, and you're going to trade 1% per trade, meaning you're going to shoot to make $500 or shoot to lose $500. With that, you're going to be allowed to lose 4 trades. Now, even with the worst strategy and the worst possible market conditions, it's almost pretty difficult to lose 4 trades consecutively in a row. Not saying that it's impossible, it's definitely possible, but it's very, very hard. So when you're shooting for that 1-to-1 risk to reward ratio, you only need to go on a winning streak of 2, 3, 4 trades before you start to get a little bit of cushion in that account, to where then you can kind of drop your sizing down a little bit as you get closer to that $3,000 threshold, and then kind of slow roll and slow trade that into profitability and into funding stages. Now, if you play with a 2% risk per trade, you're looking at making $1,000 or losing $1,000 per trade. So technically you can go on a hot streak of winning 2 or 3, 4 trades in a row and be funded almost in, matter of 2 or 3 days. So when you hear about people passing these evaluations and these combines in, little as 2 days or little as 3 days or 1 week, it's because the amount of risk on the table is a lot, versus someone who's looking to play 1 or 2 micros and kind of slowly grind this thing at $100 a day or $50 a day. That's going to obviously take you 30, 45, 60 days to pass. Again, like I said, there's nothing wrong with doing it that way, but I would only recommend doing that way if you are not profitable. I would only recommend doing it that way if you don't already have a system and rules in place. That way you can kind of build your rules, build your trading plan as you go along with taking trades along the way. But for someone like myself who's been trading for almost 8.5 years now, seven years full time, it's been about 6.5, 7 years full time, and over 8.5 years total, I'm already pretty comfortable with my risk. I'm pretty comfortable and confident in my strategy and in my trading and in my techniques. Now it's just all about taking trades. So when it's just about taking trades and being on the right side of the probability, I want to finish these as fast as possible. If I go out there and I buy 3 accounts, I'm only technically risking $150. Regardless if I was to blow all 3 accounts, it's only $150. It's not like I lost $6,000 combined with the 3 accounts, being that it's $2,000, $2,000, $2,000 per account. It's not like I really lost $6,000. I only lost $150. So if you start to look at it from a business perspective, if I'm going to risk $150, and even if I can get 1 account funded, that account should still pay for itself even with blowing 2 accounts when you take that first payout. Now, the risk is a lot different when you get into the funded stage. We are no longer going to risk 1 or 2% per trade. What we're going to do is cut that in half to like 0.5 or even 0.25 a trade, meaning I only want to risk about $150, $125 to $250 a trade. And how I'm going to do that is by simply trading 1 or 2 micros at a time. I'm going to broaden up my stop loss. I'm going to give myself 45, 50 points worth of stop once I find and identify my setup based on my strategy. So even if I'm trading 1 micro contract, the most I'm going to be able to lose on a 45 or 50 point stop loss is going to be anywhere between $80 and $100. Now, mind you, you're only going to make between $80 and $100 on that 1-to-1 trade as well. But if you kind of understand that once you're funded, there is no more rush to kind of hit that end of the finish line, because we can sit here and make $200, $300, $400, $500 a week. Let that stack up. In the meantime, go out and take more evaluations to try to max out at 3 accounts that Topstep will give you in the funded stage. So again, even if we're making, let's say for example, let's just play very, very small. Let's say for example, we're making $1,000 a month, guys, which is not a lot of money on 1 account. If we scale that times 3, now that's $3,000 a month in payouts that we could potentially take home. Again, mind you, it's all about letting those small gains kind of stack up. And over time, you can go out and look for other prop firms to add more accounts and scale that revenue up even more without taking on any more risk, if that makes sense. So we really never need to go out there and kind of throw on, 4 or 5 mini contracts to have a great month. We can kind of slow roll these things with 1 or 2 micro contracts, get over that threshold. And once we start to really build over that threshold, or that drawdown is not going to, we're gonna be allowed to take more drawdown, is when we can start to take trades with 3, 4, 5 micro contracts. When we get up to around 7 or 8 micro contracts, because we've built a cushion, let's say, for example, we're going to start off with the $50,000 account, and let's say 3 months later down the road, we've got $7, $8, $9, $10,000 in profits in that account. Now we can take on more risk, and we can start to trade that 1 mini contract where we're going to risk around 1% per trade, because it's going to take at least 8 or 9 trades before we lose our account. But based on your probabilities and based on your setup and your win rate, you should already know, are you a 60, 70% trader, 55% trader? Even with those type of metrics, you're still going to be in the net positive each and every single month. So it's all about understanding what type of trader you are. It's all about understanding your risk, and it's all about having realistic expectations, and then just scaling that times 2, times 3, times 4, times 5, however many funded accounts that you can get. As you start to get more funded accounts, the revenue starts to get larger and larger and larger. So versus trying to go out there and make $5,000, $6,000, $7,000, $8,000 on one account, which is extremely difficult just due to the market volatility and different things that kind of happen each and every single day, it's a lot easier to go out there and make, $800, $1,000 on one account. Just scale that times 5 accounts, or scale that times 10 accounts. I hope this video helps you guys. If you guys want to join Topstep, I got a link down in the description box below. If you guys want to trade with me and the team at Evolution Traders each and every single day live, that link is also down in the description box below. It's $12 a month. You can log in, you can talk, you can text, you can do whatever you want. You can ask questions. We can take trades and look at technicals together, and you can kind of do your own due diligence and see if that risk model kind of fits what you're looking for based on your trade plan, and then build up a camaraderie and join the team. It helps having other people look at the charts alongside with you. That way you just get a better understanding and overall fear of the markets. That is down in the description box below. If you're a little bit more of a serious trader and want to get some exclusive one-on-one mentorship and join the other over 85 Evolution Traders mentees that are in the group, we have some people that are doing this full-time, some people that are on their way to doing it full-time, people who are passing challenges and evaluations, people who are adding supplemental income to their existing 9-to-5 income. If you want to trade with the rest of the team and you want access to the courses, you want access to the one-on-one calendar so you can schedule one-on-one coaching calls, and you would also like access to my personal watch list as well as my technical daily analysis, make sure you guys join the full mentorship, become a gold member at Evolution Traders, and I'll see you guys all on the inside.